Traders at Access Bank expect minimal trades to be consummated today due to the weak demand for long debt instruments. For the T-bill side, some cherry picking is expected, barring any OMO auction announcement by the Central Bank of Nigeria. Well, Senator Audu, Treasury Team Member at Access Bank, joins me now for more on this. Senator, thank you so much for joining us on the show today. It's been a minute. I had a conversation with you last, but let's talk about what's playing out in the FX market, because that's what catches my attention the most now. The dip we've seen at the NAFEM rates. This is a big blow to the FX market.
Thanks, David. Thanks for having me. So as rightly said, we saw a significant depreciation in the NAFEM rate, NAFEM being the Nigerian Autonomous Foreign Exchange Market. We saw it depreciate to 996 naira 75 kobo yesterday, up from about 860 naira. But it's important to know that these figures were printed earlier in the day. After the publication of those figures, we saw the CBN come in to intervene. So we saw the CBN further clear some FX backlogs yesterday. So we should see a downward correction in the NAFEM rate today, and an attendant downward correction as well in the NAFEX rate.
Okay, now let's also talk about some of the intricacies that we've seen so far since the midweek T-bills auction as well, subscription levels, and how do you see things panning out as we're looking into next week?
So in the Treasury Bills market, there was an NTB auction on Wednesday. The DMO offered exactly what was to mature, about 310 billion. We saw significant interest from counterparties. The subscription came in at about 875 billion, and with the DMO selling about 497 billion. 497 billion being significantly more than the amount on offer, 310 billion, but significantly less than the subscription of 875 billion. We saw this increased interest reflected in the stop rates. We saw stop rates across all three maturities rise. On the 3-month bill, we saw it rise from 6 to 7%. On the 6-month bill, we saw it rise from 9 to 11%. And on the 1-year bill, we saw that rise from 13 to 16.75%. Immediately following that auction, we saw the unmet demand filter into the secondary market. So we saw the 1-year bill, for example, that closed at 16.75% at the auction, start to trade at the low 15% handle.
And how are investors also positioning ahead of next week's bond auction?
Yeah, so on the bond side, we've seen as well market players exercise some caution. As you had earlier said, the market is primarily bearish, but this is attributable to the body language that we've seen from the DMO and CBN for an appetite for a bit for higher rates. So we're seeing market participants price their bids much higher. At the last auction, we saw the 4 bonds on offer, the same 4 bonds that will be offered on Monday, which are the 2029s, the 2033s, the 38s, and the 53s. At the auction, we saw them close, particularly the 53s, which closed at 16.6%. We've seen it trade as high as 17.5% in the secondary market. So we expect a significant increase in stop rates at that auction on Monday.
And looking at liquidity levels for next week too, what sort of picture do you see unfolding?
For liquidity levels, we saw a marginal decline this week. We saw the market liquidity open on Monday at 350 billion levels. Yesterday, we saw it open at just above 300 billion. And we expect a further decline today, given the over-allotment at the NTB auction yesterday. For our expectations regarding next week, we expect nothing significant between now and Wednesday. We don't expect any significant change. But Wednesday is the bond auction settlement debit, and on that day, we expect a significant decline again in market liquidity levels.
And then next week as well, too, we're also expecting inflation numbers as well to come into that, also on investors' focus.
Yes. So at the September figures that we saw for inflation, we saw that come out at it was up from 25.8 to 26.72%. The next publication is to come out next week, as you said, and our expectations is that these rates would rise as well. So it sets up the stage for an interesting MPC meeting, which we expect to hold on the 20th and the 21st of November.
Senator, thank you so much for speaking with us. We'll leave the conversation here for now. Do have yourself a wonderful Friday. That was Senator Audu, Treasury Team Member at Access Bank.